just a word of housekeeping. Check out your WOVA app. If you have questions, please enter the questions on the app. We're going to get to some by the end of the session, and they'll be fed up here, and we'll get to as many as we can. So my name's Sean Randolph. I'm Senior Director at the Bay Area Council and Economic Institute. We're a research and public policy organization based in San Francisco that focuses on the economy in Silicon Valley and California, and a lot of our work has to do with global business, global investment, technology flows, and of course that includes, very importantly, flows to Mexico. A word of introduction about what we're going to be talking about. Of course, we're going to be going more into a topic that runs throughout this entire conference: supply chains, friend shoring, ally shoring, near shoring. But we're going to do it with a particular angle, which is China. And at the end of the day, we wouldn't be having this conversation if it wasn't for China. That's what's driving it. Under the model under which a lot of global companies operated, especially after China joined the World Trade Organization in the early 2000s, the strategy was do your production in the cheapest possible place. Logistics facilitated that, and until maybe 8 to 10 years ago, that was the prevailing model. So what changed? I think one big factor really overshadowing everything is a profound decline of trust between the U.S. and China, going in both directions, but certainly distrust in the U.S. of China, especially under the leadership of China's President Xi Jinping. What drives the lack of trust? Well, under China's terms of membership with the World Trade Organization, there was an underlying presumption that China would, over time, become more like us, not politically but economically. It would be driven by more market principles, WTO rules, and that there would be economic convergence. And now we've seen a questioning of that, sort of a growing belief that, well, no, China doesn't operate by those rules. It operates more by its own rules, especially in recent years with growing subsidies in China, national champions, growing emphasis on state-owned enterprises as opposed to private companies. And you layer on top of that, this is really a U.S. perspective, the growing centralization of political power within the Chinese Communist Party, things happening in Xinjiang, outside of China in the South China Sea, what happened with really the suppression of democracy in Hong Kong, all of these have continued to raise tensions between China and the U.S., but China, the U.S., and many, many other countries, especially friends and allies around the world. And then we add in Taiwan, and what we heard about in our opening session, the extreme vulnerability of production in Taiwan in the area of semiconductors, to disruption, military events that might threaten Taiwan production and our economies. So if you look at all of this, it's raised the risk, the perception of vulnerability, certainly in the United States and among key allies, of supply chains in the event of a political crisis of some kind or military crisis in the worst situation. And then we have, I think, the final sort of nail in this particular story, what happened in COVID. A lot of people realized when COVID began that a lot of PPEs were not being made in North America, they're being made in China. And they came to us from China, but nevertheless there was an awareness of the limited availability of things not being made in China. And then the really severe lockdowns in China, which were reversed after a while, but so many of our companies, global companies operating in China, realized their supply chains were shut down. They couldn't get their employees into work, they couldn't get the components they needed, and things picked up again, but I think many of them reached the conclusion that this can't happen again. We can't allow ourselves to be vulnerable in the way we were, in the way that the experience of the COVID lockdown showed. And so recent surveys of US companies in China, several have shown declining faith in the future of those companies' profitability, their long-term presence in China. For most of them, China is no longer the number one global destination for investment. It's moving to other places. FDI is declining by those companies, and they're looking to diversify their supply chains, not to leave China, but to diversify them. And that really brings us to our topic here today, which is the need to lower dependence on any one supplier in the world. It happens to be China, and China brings particular issues to the table, but it points us toward the need for resilient, secure supply chains, which brings us to North America and the unique position that North America occupies. So we have an extremely qualified, knowledgeable group of people to talk about that this afternoon. Bismarck Lepe is the CEO of Wiseline, which is a global technology services company in Latin America, very active bridging U.S. with Mexico and especially Guadalajara. Kimberly Breyer, who is senior advisor with the law firm of Covington and Burling. She has a lot of experience in Latin America, including as Assistant Secretary of State for Western Hemisphere Affairs. Eric Krypton, who's the Director of Business Relations with CDPQ Global, which is a Quebec-based global investment group that invests in Western Hemisphere, especially the U.S. And then Peter Hall, who's Senior Economic Advisor at Martin Rea International, and he had served previously as the Chief Economist at the Export Development Agency for Canada. So lots of global experience there as well. So we'll jump right into it, and maybe we'll start with you, Kimberly. You're in Washington, and when you look at the environment in Washington, it's very negative on China. The tariffs from the Trump era are still in place under Biden. We've seen tightening of restrictions on the U.S. part under the Biden administration, but I think there's even a more negative view of where relations are going with China in Congress. So when you look at the U.S. view, the government view of China, its role in the world, its relationship to the U.S., what do you see motivating that? And when we think about offshoring, nearshoring, ally shoring, and supply chains, is there a strategy that's more than just being down on China? Is there a strategy that you see the administration implementing that would push activity toward Mexico and toward other reliable supply chain partners?
Great, well, thank you, and I want to thank also the sponsors for being here. Once again, they've pulled off an extraordinary conference. We were here last year, and I think it's only grown since last year. So my kudos to the North Capitol Forum and the U.S.-Mexico Foundation and everyone who's supporting the effort, and thank you for the panel. So as Sean said, I'm here from what I fondly call Planet Washington. I don't know if any of you have ever read Jeff Davidow's wonderful book about the U.S.-Mexico bilateral relationship called The Bear and the Porcupine. In that book, there's an entire chapter that's titled Visits from Planet Washington, and it's about when he had officials coming into town and the perspective that they would bring from what often seems like another geography, another world. So, clearly things in Washington, the world has changed, and I think that's the first thing. As a former analyst, I can tell you the hardest thing to grasp analytically is when you're in the middle of a strategic shift. It often doesn't feel like that. It's very incremental. It feels like something that's happening kind of slowly and then all at once. And I think that we're in that, we're at the beginning of what I think is going to be a strategic shift in Washington. I happen to have been also recently in the government, but also in the government in the 2000s, soon after China had joined the WTO. I was in the Bush administration. I remember the papers that were written at that time about the optimism that people had that China would come into the system, that it would play by the, what we call the world order, the rules of the world order. It's clear now, 20 plus years hence, that the consensus in Planet Washington is that hasn't happened. I think COVID only accelerated the feeling that people had, prior to the outbreak of the virus, that China was not playing by the rules. And I think that what happened with COVID, was case in point for people that the world needed to change. So what do you have? You have a debate in Washington that emerged in a Republican administration, and in fact, we're here in part to talk about the CHIPS Act. The CHIPS Act, in some ways, was the brainchild of a colleague of mine in the State Department, Undersecretary Keith Kratch, who now runs a tech center at Purdue, when he was looking at a potential investment by Taiwan Semiconductor in the United States, and there was a sense that we needed to provide, the U.S. needed to provide, some incentives. I think the overarching thing that people need to understand, and I'm not sure how far that understanding has penetrated through North America, is that this is driven by national security. This is a national security issue for the United States and for Canada, and we hope for Mexico as well. That is the modus, that is what's pushing everything, that is the framework by which people view the need to change and create more resilient supply chains that are considered secure from a national security standpoint. And so one of the things that you got, yes, I think there is a strategy in the sense that we have new committees in Congress. There's obviously a bipartisan consensus on this, which there is not on any other thing, I'm pretty sure. Maybe we'll see something come out, Ukraine for the border in the next couple of weeks, I don't know, but clearly people in Washington don't agree on much. But they do agree on this, and the CHIPS Act is one of many pieces of legislation that are aimed at encouraging the private sector to shift the supply chains and have either redundant capability or more resilient, more reliable supply chains, so we don't end up single-threaded on key products, especially in the tech sector, but beyond that. So I think that's the crux of it. To the second part of your question, I don't want to go on too long, but the North American role in it, I think, is critical. And I think we're at the beginning of a process that could be transformational for us as people in the three countries in North America. But again, on Canada, we're very clear. Canada is a NATO ally. It's a Five Eyes ally. We share the most sensitive intelligence in the United States with Canada. The national security alignment between the United States and Canada is very, very clear. The Mexico piece of it, and I can go into this more later, the Mexico piece of it, I think, is a little bit more of a question mark. And for me, what's important for North America is that we have this opportunity in front of us, and the question is, are we going to take it? Are we going to seize it? And to what extent are we going to seize it? And I think that's something that we have to really be thoughtful about in the context that this is a conversation about national security.
If we could follow up with one more question on the CHIPS Act, then. The act is really about building manufacturing capacity in the U.S., but Secretary of State Blinken has been in Mexico, encouraging Mexico to get in on this process. So is there a tension between an act that is fundamentally designed to build manufacturing in the U.S. and simultaneously encouraging that to be happening in Mexico and Canada? Or have they intellectually laced those pieces together in some way so they fit?
It's a good question. I think my perception is that while the funding, the main focus is for chip manufacturing, it's actually, if you go into the CHIPS Act, it's a lot more than that. And there are different pieces of the CHIPS Act that are about telecom, that are about supply chain, that are about packaging, that are about all of the supply chain that would lead to the production of semiconductors and other technology. And so I think the thinking is broadly that it is an opportunity for Mexico that could be, quite frankly, transformational in terms of foreign investment. But the question is whether Mexico is going to take the opportunity or not. Is Mexico truly aligned? And part of the discussion, I think, the CHIPS Act does have guardrails, which means if you want to apply for funding under the CHIPS Act, there are certain compliance obligations that your company is going to have. And those compliance obligations sometimes involve restricting your involvement in operations in China. And so I think people have to be really mindful that this is again, it's a national security argument. The other thing I would say is that like anything, the questions for me also, I work a lot with the private sector now in my current role, and the private sector is looking for what it's always looked for in terms of supply chains. It's looking for reliability, for transparency, for rule of law, for enforcement of contracts, for security and property rights, for the rules of the game not to change overnight, and surprise you. So, the private sector, I think, is looking for all those things as well, and that's the choice for Mexico, because if it wants to attract this investment, it's going to have to deliver on some of the things that the private sector is looking for in order to be confident in their investment.
Thanks. So, sticking with the semiconductor theme, Eric, how do you think the CHIPS Act could contribute to semiconductor supply chain resiliency in North America?
All right. Well, thank you, Sean, for the question. And let me also thank the organizers of the North Capital Forum for inviting me, both a fellow and a participant here. I mean, I think it's somewhat easy to answer that question. We just have to recall our discussion yesterday, right? Something like 90% of high-end chips are produced by one company on one island that's considered a renegade province from a major superpower, right? So that's not a sustainable solution. So clearly, I think the resilience comes from having alternative supply chains. We saw what happened with COVID. We saw what happens when there's disruptions on energy with the war in Ukraine so we know what happens, and we know that the stakes here are really, really high across all sorts of sectors of the North American economy. So clearly, resilience will come through diversification of sources and being less vulnerable to unanticipated disruptions.
Maybe continue with you, Peter, again, still on chips. So the USMCA is coming up for review, not too far down the road. How do you think that review process might impact decision-making around supply chain investment in chips and other sectors?
Well, it's a really interesting question because, we have axioms that we're dealing with, laws that are being put into place. There's also guidance that is not as clear, not as direct. So the whole notion of reshoring, nearshoring, friendshoring, ally shoring, whatever we want to call it, is evoking a reaction out of business, let's say, that is saying, well, how can I anticipate what that means and what it might mean in the future in terms of me getting sort of ring-fenced on being offside with a policy. And so, ultimately, these are policy decisions. They're not business decisions. Business is trying to figure them out, and there's a real gray zone inside of all of that. I'm thinking of this as an economist would think of it. What really is the game that's being played here? It's clearly a suboptimal framework, decision, laws, and so forth, because we were arranged in a particular way before all of this happened. Okay, so business decides, okay, if we've got a global world, let's organize ourselves around that world in as optimal a way as we possibly can. And let's just assume there's no cheating. Business just decides, okay, here's how I'm going to configure myself around the world. We get to something like reshoring, nearshoring. Business has to say, okay, that system is now broken. There is a suboptimal system. How do I react to that system? Well, there's all kinds of players in the panoply of business that are going to react in different ways. But again, what they're trying to do is optimize around the perceived changes that are actually happening. I'm getting to the point because, I've had to back up a little bit here in order to bring this home. So businesses are deciding to do this, and they will make decisions, and they've got until 2026 or a couple of weeks before, review begins or what have you, to find out whether the decisions that they've actually made are decisions that legislators, policymakers in the United States are going to be comfortable with. So was the spirit of what we actually unleashed out there followed? So USMCA review is a great big day of reckoning around the decisions that business has actually made. Will they be offside? Will they not? So whether we're actually talking about chips or whether we're talking about the auto sector or whether we're talking about whatever kind of manufacturing that we're talking about, has the spirit of these rules been complied with or not? And that's the debate that will happen around USMCA review. Can we tell that in advance? Nobody in Washington seems to be very interested in this right now, so we're not getting lots of indications as to, or guidance as to how business can actually get itself ready for that. So the answer to the question is, business is trying to do their level best to anticipate what is going to pass muster when USMCA review actually occurs. But there's a huge gray zone inside of that at the moment.
Thanks. So let's come back to you for a moment, Eric, on the subject of business decision-making. So you represent a major investor. How investable do you think reshoring is? And how large an opportunity would you see that, especially for institutional investors, and what kind of challenges would institutional investors see when they look at reshoring in chips, but other sectors as well?
Sure. So let me begin by saying that we think this is a huge, once in a lifetime or once in a generation opportunity. So the paper I wrote as a fellow, I didn't focus on the chips or the semiconductor industry. I focused on the decarbonization, green energy sector. But the message is the same, that we have an opportunity here with the public policies in place in the US and Canada and increasingly in Mexico to really situate North America as the world leader, both in the renewable energy sector, but also in the chip sector. And for us as a pension fund, this is really key for us because many of us, such as CDPQ, we have two mandates. One is to earn a return for our depositors. Over 6 million citizens of Quebec rely on us for their pensions. But we also have the dual mandate to promote the economic development of Quebec. And obviously, by strengthening North America, strengthening the resilience of the supply chains, and trying to position North America as the world leader in renewable energy and chips and infrastructure, this is really a huge, tremendous opportunity. And for us who invest with very long time horizons, 20, 30, 40 years, this is very exciting. Now, it isn't easy, though. If it was easy, it would already have been happening, and we wouldn't have needed all this policy measures that have been passed in the last year or two. There's a number of challenges or things that we have to think about. I'm not going to go through them all, but I'll mention one or two quick ones. So if we look at the chips sector, the semiconductor sector, sure, we can come up with the investments to build these billion-dollar factories. Is there the labor force, the skilled labor force in North America needed to operate these? That's a huge, outstanding question, and it's one that, for us, if we're going to invest in something over 20 to 40 years, we want to make sure that there's a comprehensive policy environment in place that considers these secondary things, not just sort of the initial financial tools needed to build the factory, but to ensure that it's able to operate over 20, 30, 40 years. Another one is, well, what if there's other competitors in other markets that flood the North American market? Then what? Well, what will happen to demand? Will there be a demand for these products that we're about to spend, billions of dollars on? So what is the long-term vision of the policy environment that will ensure not just the financial viability of these investments now, but 10, 15, 20, 30 years from now, which is a time horizon that pension funds and other institutional investors need to consider.
Thanks. So Bismarck, we'll come to you now. This is obviously an international process. We have companies like in chips, Samsung, TSMC, investing in the US now. So how important do you think international partnerships are to the supply chain resiliency, especially around chips? But also, what kind of opportunities, but obstacles do you think internationalizing this conversation brings to the table?
So I think Eric teed up the conversation about talent. And maybe it is a once in a lifetime or once in a generation opportunity, but NAFTA was here, the maquiladora industry was a boom for the economy. And then early 2000s, as China emerged, a lot of people went broke. A lot of companies closed up. In Guadalajara, which is called the Silicon Valley of Mexico, companies like HP had to shift from manufacturing to knowledge work. And I think about eating a berry that comes from Michoacan that travels thousands of miles to the US, and I just think of the carbon footprint of that, and I feel like that's going to need to change. And so manufacturing may get closer to the customer, and so although there may be a boom right now, it may change. In the same way that China emerged in the early 2000s, India may emerge again. And so my view on this is there is a big opportunity for Mexico to take a lot of this investment, but to invest in its population for knowledge workers, right? The biggest design center that Intel has is in Guadalajara, Mexico. They may be manufacturing in Taiwan, but the biggest chip design center is in Guadalajara, Mexico. And so I think right now it's very important that the economy invests in its talent to focus on the higher value things that are going to be making manufacturing more valuable, even if it doesn't happen in Mexico. And we do have this decade, 15-year period, and it is going to have to be a partnership between the private sector and academia to make sure that we are preparing this next generation, because be it automation, be it India, being the carbon footprint of the end product, I don't think we can just completely bet on manufacturing just getting closer and Mexico benefiting from the physics of it. I think we need to benefit from knowledge.
Well, I think one of the gaps, I think, in Mexico's positioning today is it's outstanding at advanced manufacturing, but there's not much R&D, there's not much value input that would really allow innovation to be happening. So when you look at semiconductors in particular, but other things as well, so how ready do you think Mexico is today to get some of this investment? Because there's a 5-year window in the CHIPS Act, so things are gelling and coming together fairly quickly. Can Mexico gear up, and are there particular geographies within Mexico that seem better prepared to get this kind of investment?
So I think the CHIPS Act has about $10 billion earmarked for education and in STEM and things that are actually going to help chips. And it doesn't say that you have to invest STEM in the US. You just need to invest in STEM to make sure that you have the ability to build out these chips. And so in theory, going back to the knowledge worker strategy, you have a much younger population in Mexico than you do in the US. You can partner with academia. You know, when we opened our operations for my prior company, Uyala, in Guadalajara, we went to the board and we told them that we were going to be opening in Guadalajara. And they were very excited that we were going to be opening in Guadalajara, Spain. And when I told them that it was Guadalajara, Mexico, they looked at me and asked if there were engineers in Mexico. Obviously, that has changed. There are a lot of tech companies, there are a lot of unicorns that have been funded in Mexico. But it was a partnership between our company working closely with Tec de Monterrey to make sure that they were learning the new languages, the new frameworks, cloud computing versus traditional programming. And so I think there needs to be that strong partnership between what industry needs and the academic system to make sure that the academic system can benefit as these fabs come online in the US, and that you have the knowledge workers that can design the chips in Mexico, but potentially immigrate to the US to be able to manufacture the chips.
Great. So bringing it back to China, Peter, we know that there's not a lot of Chinese investment in Mexico, but that it's going up. So what kind of patterns do you see around China's investment here? And that would also apply to Canada? And are there particular industries that this is going into? Are you seeing a trend?
It's a great question. There are two answers to that. You can always depend on an economist for two answers to a question, and if they compete with each other, that's even more up our alley. When you look at the data, it's Mexican data. It's verified by the Federal Reserve Bank of Dallas. They watch these things very carefully as well. Chinese foreign direct investment in Mexico is minuscule. It doesn't show up on a pie chart. Whether you're talking about year-to-year flows or whether you're talking about the accumulated investment inside of Mexico, it's just not on the radar screen, which may be a surprise to many. So it has also been very focused on assembly inside of the tech space, and so not tremendously high value added stuff that's going on. So you might look at that and say, okay, well, no threat there, nothing on the radar screen, let's go on to another issue. That can all change very quickly. Investment, first of all, is very hard to measure. It doesn't matter whether you're in a fully developed economy or a developing economy. It takes a long time to actually get good investment data. Take it from somebody who's analyzed this all his life. And so something can be going on, and it's right under the radar screen. You don't know what's actually happening. Anecdotes are essential at that point in time. And so when you look at the anecdotes of Chinese investment in Mexico this year, so we've got data right up until 2022. You look at it this year, it's a bit scary. You know, we've got regions of Mexico that are reporting back on, you know, permit applications, shovels in the ground, and it seems that in some jurisdictions that China is second only to the United States in terms of what's going on. Now, China was eclipsed not just by the United States, which accounts for more than half of the foreign direct investment that is coming in to Mexico in any given year, but by Canada, which is a number 2, and then Europe added together sort of rivals Canada. And then everything else is just bits and pieces, and China's a tiny little slice of that. So China actually registering in some of these investment calculations right now as number 2 to the United States is big news. And it doesn't take very long to upset an apple cart there. And so the, I guess, interesting thing about all of this is that it can be in place long before there's a recognition of what's actually going on. Now, there are 2 incentives that lead to this kind of activity, regardless of all the discussion that's actually going on. Number 1, if you are a local official and you're interested in your own profile and in the success of your jurisdiction, ribbon-cutting ceremonies are a very good thing for all of that, especially if you're heading into elections. And so the profile of that is you know, it's, you can't get it in many other ways. So it's very welcomed, regardless of the source of all of this. The second thing is that business does things on a bottom line basis. So if somebody is coming in and offering a price point that is very attractive to them, even although business might be concerned about the nature or the origin of this investment, they're going to be inclined to say, well, you know, my shareholders are going to be very happy with me getting this new price point, and so I'm good with that. And so initially, there's a short-run acceptance of this kind of thing going on. So I'm highly concerned that something is going on right now. It is under the grand radar screen, and that, you know, at some point we're going to wake up and say, hey, this is totally not what this was intended for. Somebody's coming in the back door here. It's the ones that we're identifying as the ones that we're trying to organize around at the moment. When is it too late? When does this disruption actually happen? What are the actions that are taken against this once it's too late? You know, is American investment going to be stranded inside of Mexico? Is Canadian investment going to be stranded inside of Mexico? Is European investment going to be the same? Investment that's aimed at the US market principally. So this is highly concerning, and if it is going on right now, it's certainly something that needs to be noted. It needs to be in the discourse, and needs to be taken into account by government levels, by business itself, and in terms of civil society discussions as well. It's paramount.
So let me follow up on that with you, Eric, that it probably matters what China is investing in. Are they investing in, say, critical components for technology products? But with the review of the USMCA coming up, and given what we were talking about earlier, what Kimberly mentioned, the very sort of bipartisan consensus that China is a severe problem in Washington, D.C., what's the implication of the perception of, or the fact of Chinese investment in Mexico at a significant scale for the USMCA?
Sure. So I'll answer that by making an observation. Like, there's really 2 main vectors that are driving a lot of the investment by Canadian American companies in Mexico, right? One of them is the security vector, which we discussed earlier. And then the second one is what I would call about, you know, cleanliness of supply chains. Companies are under growing pressure by their shareholders, or in the case of pension funds, by our depositors, to ensure that we have good visibility on our supply chains, that there's not issues of forced labor, that we're able to track, you know, the scope 2 and 3 emissions. So all of this is really important. And so if as a result of increased investment by China and Mexico, there's questions that are being raised about the supply chains, like that's gonna have a serious impact on the willingness of a lot of investors to invest in long-term assets in Mexico, because it's precisely because of the perceived cleanliness of the supply chains, whether on security or on social or ESG issues. So that really makes tracking this, having good transparent data, being out, and it's not easy. It's not easy to track all, you know, the foreign direct investment coming from China, what sectors, where are the components going into, are the components being mainstreamed into from components that are made locally or imported from other countries. It's not easy, but that really needs to be a key priority, I would think, of the Mexican government if they're going to want to continue attracting foreign investments, especially from Canada and the U.S. the way they are, to benefit from the perceived cleanliness of the supply chains.
Thanks. So Kimberly, you're in the political mix. You're in D.C. Do you agree?
I do, 110%. Yeah, I think that's exactly the question. I think over time, and I totally agree also, I don't think it's really arrived yet in Washington, the idea that maybe this has some unintended consequences, but I would say, you know, Mexico's at a moment where it really needs to understand what the drivers are, and the fact that private sector is going to be looking, like in 5G. You know, there's a whole initiative out there, clean networks in 5G. What is it? What's a clean network? It means that it doesn't have components made in China by Chinese companies in the network, and so all of that, people are getting much more rigorous, and we see this a lot, you know, from the law firm, the rigor that companies are now using to examine the supply chain all the way down to where it starts is something that I think we're just getting started on this, and I think there's going to be a much more strenuous focus, and you've mentioned the 2026 USMCA review, you know, a couple of times. I don't think we're there yet in DC at all. You know, we don't have a budget for this year yet, so we'll worry about 2026 a little closer to the time. But I think, you know, these are the kinds of questions exactly that are going to come up in that review, along with all of the other things that you know, that have been discussed. And one thing I would just add, and I think it's a particular question for Mexico going forward, and particularly for the next president in Mexico. All of the things we're talking about, foreign investment, you know, supply chains, more manufacturing, creating more jobs, it all relies on energy. And that, to me, the fact that, you know, we're continuing to have a discussion between the United States, Canada, and Mexico about decisions that were taken in Mexico regarding energy policy, I think is going to be one of the key questions, you know, going forward, not only for the 2026 review, but for whether Mexico really takes advantage of this moment that we're in, that we've talked about. I mean, it really is an unprecedented opportunity. It really is quite something.
One very last question. I'll toss it to you, Bismarck, and if you give a short answer, then we'll still fit in one or two questions from the audience. But this is around ecosystems. So Southern China has developed this amazing ecosystem of suppliers that it's just hard to replicate. People aren't fleeing there because it's hard anywhere else just to create such a dense web of suppliers who are efficient and plugged in and productive. So when you think about semiconductors or other things, how do you think Mexico, maybe Mexico with the U.S. together, maybe with some border states, can actually create like the kind of deep ecosystems that will get multiple players in and really make North America a resilient place for some of this investment that might have gone to Mexico, or rather to China?
So I've been involved with two companies, a company called Betterware and another company called Proesa. And Betterware had about 60% of its manufacturing in China. And they've said that they've tried to bring more of it to Mexico. But the problem is, in China, everything just works. Everything's in one building. The entire supply chain is in one building, and everything works. Things are improving in Mexico, but it's going to take time to have an integrated supply chain. And maybe the border states that are closer to the U.S. may be able to benefit from a ramped up rate, but it is going to take time. Again, I go back to knowledge work. It's much easier to train people and put knowledge in their brains and build ecosystems around capital to invest in those ideas than it is to build factories. And so, although we should benefit by doing all of this to integrate the supply chain and get more manufacturing dollars, the future needs to be knowledge work.
Got it. Thank you. So do we have any questions, Julia?
China following a big master plan to expand and dominate the world, also taking into account Mexico.
Anybody?
I would say this, by virtue of the type of system of governance they have, they're far better at long-term planning.
That's a very good answer. Anybody else? Time for maybe one more.
I want to chime
please.
in on this
Go for
as well. I mean, I think that we misunderstand China if we don't understand that China, when pushed, pushes back quite hard as well. So, you know, one might say, well, this has just been the grand design and we're just revealing it over time. I think we need to understand that when China is threatened, China takes those kinds of threats because of its historicity very seriously and tends to, you know, overreact. And we can point to many points in history where that's actually occurred. We're seeing a manifestation of it at this point in time. That's not the entire argument, but I think it needs to be factored into the argument in terms of the kinds of discussions that we have. So when a Janet Yellen goes over there and goes, hey, come on, let's inject some sanity into what's happening here. You know, Amazon wouldn't have a business model without its interactions with China. Neither would Walmart, neither would Apple, neither would a number of different companies. Let's cool this down a bit and talk about it. That's when I think we can see the U.S. government understanding or demonstrating its understanding of that funny bone that China has when pushed against.
I think we're out of time. Thanks very, very much, everybody. Just a parting word that this challenge from China is not going away. It's going to be with us for a very long time. One would hope that the tensions are managed and don't continue to escalate. But I think the pressure on supply chains and for realignment toward secure, reliable supply chains, especially in key technologies, is there and it's going to be there for a long time. But I think the windows for making these decisions are not going to be there forever. I think the CHIPS Act has a certain duration. I think companies are making decisions now and will be over the next few years about where do we shift this, where do we shift that. They're looking at Vietnam, which is getting a lot of business. They're starting to look at India, which is a different place altogether, but very competitive for some things under the Modi government. And then there's North America, which with its unique identity in USMCA is really unparalleled in terms of its integration and the shortest supply lines possible on Earth. So it's an amazing window of opportunity for North America, but it seems we need to be acting on that now. With that, thanks very much to our excellent panel, and thanks again to the organizers of this conference.